Stop messing around, stop fooling around, stop delaying, stop procrastinating. Get up, get out, get it done. Everything is possible, nothing is a problem, and anything can be overcome. I just get my ass up out of bed, I get my shit together, and I get out and I start the fight. And that will transform you from a mere mortal into a superhuman being. I've never, ever, ever met anybody who told me that they got rich watching their IRA or their 401k.
You know, from where I sit, populations are increasing everywhere and people need housing everywhere. So I'm just like singularly focused on housing needs and the shortages that we have in our country, in particular for housing our population. This article's talking about how the population's in decline and Germany's raising thousands of houses, creating this unprecedented amount of public park space. And, you know, China and the United States have reduced populations in their census for the first time ever. And a paradigm shift is happening. And we have a world that's built for this many people, but soon there's only going to be this many people. So this whole excess infrastructure exists. And what do we do about it? I don't know. I don't know if we're going to see it in our lifetime. The article claims that it's going to happen at the later part of the century or earlier, they say, but I don't really know what the agenda is with this article. It was a weird article for me.
Yeah. As I said, the only thing that seemed relevant, I spoke to you off camera about this before, that if there's less of a younger workforce to support the older generation, that, you know, investment becomes more important in that way. But
investment will change. Our whole infrastructure relies on younger people coming into the workforce, working their way up the ladder for 40 years, 50 years, and retiring, and so on and so on. But I guess if the population's declining, there's going to be fewer people to take the place of the hopeful retirees, and the hopeful retirees are just going to work a little bit longer. I think they're already working longer.
That's the thing that's already happening.
I remember after 2008 and Hurricane Sandy, so that was 2008 and 2012, that there was all of this media coverage about how the standard age to retire of 65 is no longer.
Right.
And that people are working into their 70s, even into their 80s. And I think that's still the case today.
Yeah,
I think people need money. They want to work. I don't think people retiring is so much of a thing in today's generation and in future generations as it used to be. I think people want to stay connected to their career, keeps their mind sharp. I think people are more afraid to pack up their stuff in a box and retire. I know I am. I don't know what I'm going to do. If I had to retire, George, if you told me I had to stop working and go enjoy myself, it wouldn't be enjoyable.
Right.
I love it. I need to be connected and involved. I love working with people and being with people. So for me, it wouldn't be great. I think there's a lot of people like me. Retirement isn't even in our vocabulary.
Yeah.
I just don't hear about it that much. I have a couple of guys in my life that are like public servants. They've been in police or fire or municipal or government jobs, and sort of that's the thing in those areas. So like I have a cop friend, just saw him last week. We spoke about this at length. He retired from his first job at 49 years old. He was a cop for 25 years. He gets his full pension, gets whatever the package is he gets. He could stop right there, but he goes and gets another job with its own pension and a package of compensation, and he continues to work now the second career. He's 49 years old. You know, he'll build up a second pension in a little bit of time. So I think that's the plan for a lot of the people that are in these positions of public service and government jobs. But other than that, I don't see a whole lot of retirement.
Yeah, I mean, even talking with like Fred Beans, we had that interview with, and he said, you know, if I gave it up, what would I do?
Fred is not the kind of guy to retire. I mean, the guy is out the door at 5 a.m. and I aspire to be half as active and ass-kicking as that guy. But to the article's point about the decrease in the population and the decline in new births, there's going to be more deaths than births for the first time in history, is what this article's saying. And that we need to rethink how our society works without all these new younger people coming into the swimming pool. You know, we'll see how that goes. Look, artificial intelligence is out there. We're all going to be threatened to be replaced by robots soon enough. I mean, it's already happening. So then the question is, when does it happen for people like you and me and our viewers?
Here you'll either be working for a robot that tells you what to do, or you'll be telling the robot what to do, and that's how the future will be.
I believe it, man. I totally believe it. Can't stop it. It's technology. It's progress. Weird article.
Yeah.
How are you this week, George?
I'm excellent.
What did you have for breakfast?
Same thing I always have.
Which is?
4 eggs.
4 eggs.
Yeah, 4 eggs with a quarter cup of yogurt with chia seeds and grape nuts and an orange. Yeah, it's every
good
day.
To be George.
Yeah. So
let's just do this. I want everybody out there to see what.
Take a picture.
Ooh, there's George, everybody. He's 140 pounds, dripping wet.
Is this a video or a picture?
It's a video.
Oh, okay. So fantastic.
And he can do plank for 10 minutes or longer. He eats chia seeds and 4 eggs. Same as I do every morning.
That's every morning. Yeah.
You know, he's got the secret to life.
So I wanted to start with talking about, there's this misconception in real estate, I think, where people throw around this term passive income with real estate a lot. That, it's passive income, it's passive income. But someone's doing the work. Someone's
always doing the work.
Right, yeah. So could you speak a little to that, about that, observation?
There's a few things. Look, if you ask young people, I ask young people this all the time, what do you like? What do you want? What do you aspire to have? And they say, I want to be sitting on a beach, and I want to have passive income, and I want to have $100,000 a month in passive income. And look, my response is there's nothing passive about anything that earns you $100,000 a month. If you're investing in T-bills, maybe that's passive, but you still have to manage that. That's a lot of capital at work in T-bills. You have to trade, you have to manage risk, you have to manage the change in rates. It doesn't just show up at your front door and you just snap your fingers and you can convert those T-bills to cash. I mean, there's a whole process. For me, I work owning and managing my real estate investments. So for me, investing in real estate isn't passive at all. I'm active. In fact, the IRS, when I do my tax returns, I have to check the box that I'm an active operator and owner and manager of real estate. I'm not a passive investor. Now, people that invest with me are investors. They're passive investors. They're passive in the fact that they don't have any operational control. They're not on site with me or in the office with me managing my teams or making decisions about buildings. They just write a check and then they sit back and wait for me to send them checks. But there is so much work that goes to be able to operate the real estate, to own the real estate, to manage the real estate, to be able to generate a check back to the investor as their dividend, as their distribution from their investment. So much work. For me, it's sometimes 12 or 20 hours a day, all the time, nonstop. And for the people I work with here in this office, it's the same. So passive is, in fact, an often misunderstood word when it comes to investing. The richest of the richest in the world don't sit back and see their money just arriving in a mailbox every month. So stop thinking that the world is filled with many months in your future where you're just going to be sitting back on a beach collecting checks. So look, if you're a trust fund baby, maybe you do, but we're not talking about that. So if you're out there, if you want to build something for yourself, if you're an entrepreneur, if you want to be in business, don't think for a second that there's anything passive about it. It's work. You got to get it done. You got to figure it out. Go out and do it. It's not passive.
You've been working a long time, and you just said, you love your job.
I need a break, man. Yeah. Just for like a day.
Maybe it's coming. What was your first? We've talked about like your first deal back in DC,
when I was in school.
Yeah, when you were in school. When you transitioned to bigger deals, what was your first deal with like substantial investment support? Like, what did that look like? Did you already have investors kind of lined up? Did you have an LLC? Can you paint a picture of that?
So I watched a lot of successful real estate investors and how they did it, and I asked a lot of questions. Everyone used LLCs, so I formed some LLCs. I didn't really know what I was doing. I didn't really know what I was going to use them for. I just formed some LLCs. I picked a name. I picked variations on that same name. I grew a bunch of LLCs that were just sitting there as empty shells, all with EIN numbers, waiting to be used for something. But I learned how to use them. Investors, didn't have any. I started with friends and family, like I think a lot of people do. And you'll hear that phrase a lot, friends and family. Look, if you're going to raise money for something, a business or a property or a deal, get started with your inner circle, your existing Rolodex, your existing contacts. You'll be amazed at how much money is sitting there. I took a look at my existing contact list years and years ago. I was terrified. I didn't know. I mean, I knew broke people. I didn't know people with money. But I had people in my family. I had people that I could hit up for a couple of bucks here and there. So I started small because that's all the money I could raise. So I was hitting up investors for $10, $20, $50,000. God, if I got a $50,000 check from someone back then, it was a lot of money. I was so grateful. And at the end of all of that, maybe I had $300,000 or $500,000 or something. I had some amount of money to work with that I was responsible for. I was obligated to people to manage their money legally, professionally, with good fiduciary. And, I did it. And
that early on, did you have like a business plan that you would pitch to them, or did you mainly just call and you're like, hey, I really want to do this?
I always had a business plan. I knew that I had to have a business plan. I fell on my face several times, even before having a business plan. I was falling on my face because I didn't have one. And I would go to people and I'd say, oh, I'm thinking about buying something. Do you want to invest? And they'd say, send me something. And I said, I don't have anything. But I was a kid and I didn't know what I was doing. So I had to learn through failure and I had to learn through growing. I learned quickly that you had to have a business plan. And my business plans were rudimentary, but they told the story that needed to be told. I had photographs, I had financial projections, I had income, expenses, I had a map with locations, and and I still do that stuff today. All my offering memorandums that I put together today have all the basic same information. They look a lot fancier, and there's more disclosures and legalese and very professional and slick looking. But certainly back then I was doing it because you have to have something to show to someone. So I started off with a back of the cocktail napkin business plan, and it evolved into a Microsoft Word 5-pager. And then I really didn't have any investors, but I had some college friends that were working, making a little bit of money in a salary that would write me checks for $5,000 or $10,000. It was fun. It was great to do business with people that I went to college with or went to high school with. And I just thought it was great. I thought it was a way to stay connected to friends. I mean, for me, it was great because I'm very social and I was looking for ways to stay connected. And I was finding that business was one of those ways. I had some neighbors. I had some friends of my parents. They all said no to me, but I got some really great advice, and I learned a lot from so many of them. I remember Dave Friedman was helping me throughout a lot of this and gave me advice. He was a lawyer. He had put out a lot of investment memorandums to his investors for things over his career. Very smart guy, taught me a lot on how to sort of package things and present myself. And I always appreciated that and so many other things from Dave.
He's the when you sell, you're out of business guy, right?
He's the one that said when you sell, you're out of business. That's right. Great memory. So I miss him. I miss his great advice. Look, you have to start somewhere and grow into it. I wasn't attracting $100,000, $500,000, $1 million check writers when I was a kid and first starting. You have to build up. You have to get a track record. You have to have a bit of a portfolio under management that you can say to someone, hey, this isn't my first rodeo. I've done about a half dozen of these. Because when you haven't done any and it's your first one, you got to create that confidence. You have to sell it. You have to really make it something that's a joint venture with you and the others that are going to be in it. Starting out it's a fun time. You're taking risks all the time. You're putting up money when you don't have a lot. You're putting in time when that's all you have, and you're wondering if your time is going to yield fruit versus doing something else or getting a job or embarking on a career with a company, right? You could spend your time doing that, but no, you're choosing to put deals together and raise money in $1,000 and $5,000 chunks. It's like banging your head up against a brick wall, but you go ahead and do that instead. I mean, it's scary. You're taking risks and you don't have the experience, so you wonder if you're right or wrong. All that stuff is very, very relevant when you're young and starting out. That
was going to be one of my questions later on in the podcast, but about risk, like we talk all about risk and about the only way to reward is taking big risks. I was going to ask, what are some big risks that you've taken that you feel like have really paid off for you? And maybe that's one of them.
I think risks are always commensurate with reward and vice versa, and that's the way it should be. Nothing that's very rewarding should just fall on your lap. I mean, it should require work. If it was easy, everyone would do it, and then the markets would adjust, and then it wouldn't just come to you so much anymore. Look, socially, there's so many big risks that I've taken. For me, they were big risks, right? They might not be big risks for you.
Right, it's different for everyone.
I remember meeting people was sort of easy for me. And my friends would say to me, wow, how come you can just go up to that person and talk to them or meet them? Or if it was a girl or if it was someone in business I was trying to meet, I had no filter and no shame. I just go walk right out. Hey, I'm Peter Siegel. What's up? How are you? And they'd be like, what? Who are you? But I had no problem doing that. I think a lot of people have fears, and I was blessed with an ability to push through my fears. They perceived that as taking a big risk. I didn't think that was really taking a risk, but I had about $20,000 to my name by the time I was in my 20s from savings my whole life, like my bar mitzvah money and like working 85 jobs and just saving money. It was about $20,000 when I was in my early 20s, and I spent all of it on my first business. And I felt like that was a big risk. And some people would say, wow, you had $20,000 in the bank. You should have maybe just only put 5 into the business and kept 15 for savings. But I didn't want to do that. This was going to succeed, and this was going to be amazing. And it was going to be because I invested and took ownership and put my money where my mouth is.
Skin in the
game.
If
I just dipped my little toe in the water and wrote a check for $2,000 or $5,000 and kept $15,000 in savings, what was I keeping the savings for? I was 20-nothing years old. I had a lifetime to make money. I wanted to get started. I wanted to invest. One thing I know is that if you want to do better, you got to invest. If you want to succeed, you got to invest. I was very excited to take risks and invest. So I invested all I had, everything. Just cleared out my bank account, put it into the company, let's go. So I think that's probably a risk that a lot of people are thinking twice about doing. They're coveting cash in a bank account. For what reason, I don't fucking know. Get your money out of the banks, get it deployed into assets, get it deployed into investments, please. But me, I was happy to get my money out of the banks even before I knew that that's what I should be doing. I just wanted to take risk. And taking risks was the thing for me that inspired me to do better and to perform. That was like the dad looking me in the face saying, Peter, I expect this of you, and you have to succeed, and failure is not an option, and you have to overcome these 5 things. And, I was like, okay, but, my dad was there giving me advice in other ways, but I felt like the risk was there staring me in the face, causing me to rise up and perform. If you want reward, you have to invest. If you want reward, you have to take risks. Taking risks doesn't mean jumping off of a cliff and splatting on the sidewalk. Taking risks means there are some things that could happen. You've thought about them. You've planned through it. You've considered all the ways that scenario is going to play out. You've accounted for the different variations in the results, and you're going to just jam, and you got it covered. You got this. That's what taking risks is. Calculated risks are good. Stupid risks are stupid risks. I'm not telling you to stick a gun to your head and play Russian roulette. Stupid risk. Making investments, calculated risks, good bet.
What's important to understand about appraisal in the real estate game? How do you prepare for property evaluation?
Everything in real estate revolves around an appraisal. When you go to buy something, you get an appraisal. When you go to refinance something, you get an appraisal. An insurance company is coming in. They're performing their own appraisal or assessment of your property. They call it a risk. They don't call it a property. When investors are considering to invest with you, they want to know what the value of the business or building is that they're putting money into. You back that up with an appraisal. Everything revolves around the appraisal. There's 3 ways to generate an appraised value. And if you get a report from an appraiser, it's going to have all of those 3 methods covered in the report. The first method is the replacement cost method. The second method for appraising is the comparable sales approach. The third method for appraising a property or business is the income approach. So the appraisal report's going to show a value for each of those 3 valuation methods, and the appraiser in their report is going to combine those 3 values and come up with a summary and a final conclusive value for your business you're building. It drives everything. So I know all the appraisers in my area, in my markets. Every time I go out to refinance or purchase something, it's the same revolving door. There's like 20 different appraisers that come in and out of this particular market. Occasionally, a bank will fly in a group from Ohio that bid on the job and won the job. But generally, it's like the same 20, 25 people that show up when I order an appraisal report. And it's amazing how the valuations can really fluctuate. If I hire all 25 of those people to give me an appraisal, I'm going to get 25 different values. I know how to read reports. Learn how to read your appraisal reports. Learn what to look for. Learn what cap rate they use. Learn what sales comps they use to generate the comps. Ask questions about the income and expenses that they underwrote to generate the income approach valuation. That's a big one. If they take your rent roll and they discount it by 10%, saying, oh, well, we just use 5% vacancy and 5% collections, so 10% total discount. I mean, it's too much. We have like under 1% vacancy and under 1% collections, so I would never let someone use a big number of like 5 or 6 or 8 or 10%, God forbid 10%, to discount my rent roll because it's too much. It's not fair. It's not right. And it's too big a haircut to take. So I'll push back on that. I'll look at the expenses and I'll say, well, let me see your expenses. Oh, well, we use your expenses, Peter, but then we put in all these other expenses that you didn't have in the setup that you sent us. Well, I didn't have them because they're not part of the cost structure of this building. What did you add that I didn't have? And we'll go through it. And sometimes they'll amend their appraisal report because I will have made a very valid argument and have convinced them with backup and data and proof that they should amend their appraisal report. So if you're to the level where you're getting your appraisers to change their reports because you called them out on something that you didn't think was right, you're an expert. I love it. Look, you don't want to overpay for anything. And the seller doesn't want to undersell anything to you. So the appraisal is going to bring everybody to the table in an equal way.
Something that comes up all the time, everybody and their goldfish seems to be talking about BRRRR, the BRRRR method. Yeah. Are you familiar with the BRRRR method?
Buy, renovate, refinance, repeat, rent, something like that?
Pretty much, yeah. Buy, rehab, repair, refinance, repeat. And I read that, so that I'm cheating.
Yeah, I have heard that. I've seen it. I know a lot of guys that are out there promoting that. It's good. I mean, look, that's essentially what I do.
Right.
I never sell. A lot of these guys sell, so they're really BRRRRs.
Right.
Because then they sell, but I don't sell, so I guess I'm a BRRRR.
Yeah, no, absolutely. Yeah, I think Brandon Turner, I don't know if he coined the phrase, but he's one of the ones that popularized it. And yeah, I think, like you said, he's flipping most of the time. But yeah, it's basically what you do, it seems to be. I was wondering if you've had any thoughts on that in general.
My thoughts are I BRRRR. I don't sell. I add value to my properties. I refinance them. I pull out money because I've added value and able to get a mortgage at a higher rate than the original mortgage I got. And the difference between the two mortgages is money to me or my investors. I'm eager to deploy that money back into more investments and do the same thing over and over and over again, as opposed to running out to the Lamborghini dealership and buying a Lambo. If it worked once, I want to make it work twice. If it worked twice, I want to make it work 2,000 times, because over the course of a career or a lifetime, if you just keep BRRRRing, man, you're really deploying capital and making it work, and you're doing it. And you're crushing if you can do that over and over and over again. I learned how to do that very young in my career. I learned that the most successful people in real estate that I was meeting never sold anything, and I wanted to be like them, so I guess I never wanted to sell anything. And it's hard when you're first starting off. It's hard not to sell. The appeal of someone saying to you, I'll pay you 10x what you paid for it. You know, it's so tempting to say, yeah, I'll take it. I don't want to pay the taxes because, like Dave said, when you sell, you're out of business. And then you also have to pay taxes. And I don't want to be out of business. I want to keep going. I want to take the money from a refinancing, have equity in my buildings, in my properties, and I want to keep doing it. It never made sense to me to sell. It still doesn't make sense to me to sell. I spend all this time and effort fighting, scratching, scraping, and clawing to find an opportunity, to get a contract drawn up with terms that are agreeable to everybody, to have lawyers not fuck it up, to have title companies not fuck it up, to have the due diligence process complete and then move on to a closing, and then to actually close, sit there at the closing table and close, and then take ownership of it, and then the next day show up to work and start managing it and start improving it, executing on the business plan, renovating, doing all the hard work, the heavy lifts. And I'm like sweating and bloody and I can barely stand, and now I got to sell it? It's like, I don't want to sell it. For me, for real estate, it's the way to go. I don't like to sell. There's certain times when you need to sell. There's certain times when you have to sell. If you're going to sell, please consider the 1031 exchange, and especially since it's on the table with the current presidential administration to get eliminated. The 1031 tax-free exchange is what enables you to sell an asset and then never touch the money, but redeploy that capital back into a new asset at the same or greater price with the same or greater amount of debt, and defer the taxes. So that's how you can really build a lot of equity over time. I never sold without doing a 1031 exchange. Guys, taxes is the single biggest thing that separates wealthy people from people who are trying to be wealthy. Wealthy people, successful people, don't pay the same taxes because they take advantage of the tax code, and they don't do things like sell and pay capital gains on real estate. You own real estate. If you sell real estate, you're sucking eggs, man. You got to pay those taxes. Just be prepared for it. People are always ringing the bell. Oh, I sold my house. I sold my building for so much more than I paid for it. Yeah, then now you don't have the asset. Now you paid all these taxes. Now what are you going to do? Oh, well, I'm going to go find another one. All right, well, I hope that you do. That's what I do. I go find another one. It's not easy.
Yeah.
I can tell you firsthand, finding more stuff to buy, not easy. So don't take for granted that you're going to just sell and buy something again once you sell. I never took it for granted. I don't sell. A couple times in my life when I sold, I always did the 1031 exchange. But yeah, the BRRRR is...
all about that BRRRR. I love it.
All about the BRRRR. Cool. Bereave me. It's really good. The BRRRR is really a good thing.
Oh, that's a rough one. Bereave me.
It's a rough one.
So I got 2 Zest Quests to finish us out today. The first is, what's something you love doing that you're terrible at? And what's something you don't like doing that you're good at?
Art and drawing and painting. I have a young kid. She loves to do art projects with me. I suck at it. She's so sweet because she's like, Daddy, you're so good. You're such a good artist. And I'm like, ugh. We had a friend come down to visit us this past weekend at our house, brought his kid, was with our kid. Everyone was playing together. We were doing art stuff. And my friend who came down is a musician. So I drew a little, like a stick figure of him playing the bass. And I created like an amp, and he was wearing a Yankees hat, so I drew a Yankees hat on the stick figure guy, and I put all these text bubbles up with phrases and funny things, and it looked like a 3-year-old did it, and I did it, and my daughter was like, "Oh, it's so good, Daddy, you were so good." So I appreciate that about her, but I'm no good at art or drawing or painting, and I try and draw things. The scale is never right. If I draw a face, like the nose is this big and the rest of the head is this big, and nothing looks right.
You're an expressionist without trying to be.
Yeah, I'm a pretty shitty visual artist.
Yeah.
And then what was the second one,
what's
George?
something that you don't enjoy but you're good at it?
So many things. So many things.
Yeah.
I don't enjoy. Well, we've talked about this a lot here. I don't enjoy a lot of things, but I have to do them, so I do them. But I do them. But what I do enjoy is the result, the light at the end of the tunnel, the silver lining that occurs. But sometimes I don't really love the task when I'm in the middle of it, but I know it has to get done. I don't love reading long legal documents and combing for errors in language and making sure the clauses are... I don't love that, but I have to do it. And when I do it, I crush it.
Yeah.
But I don't love it. And there's a lot of things like that in my work life that I get done because I love... generally what I do, but there's some details and some minutia that, sometimes it's like sticking needles in my eyes.
And then last question, when you were a kid and you went over a friend's house, what's something that one of those friends may have had that was novel or made it fun to go over that person's house?
There was two answers I have. Freddie Weiss lived around the corner. He had a slingshot. He took out his slingshot, and there was a crabapple tree in his property. His property backed up against ours. And he took crab apples off the tree, put them in the slingshot, and he was hitting trees and targets with them. And I thought that was really cool. And then one day I said, all right, thanks, man. It was fun. I got to go home for dinner. And I was walking away. I don't know if he shot one at me or if he slipped. I don't know what happened, but I turned around to say, later, man. And I got pegged in the face with a crab apple. And it took my eye out. And so that sucked, but that was my Freddie Weiss story. He also liked to dissect frogs. Freddie
that sounds
Weiss,
about right.
Yeah, he still lives in our family's stories today, Freddie Weiss. I want to know where he is. About once every 5 years, my brothers and I will Google Freddie Weiss, and up will come all these photographs of like every Freddie Weiss on the planet, and we'll send pictures to each other. Is this him? Is this him? So he had a slingshot, and then there was a guy that lived a couple of blocks away that I went to school with that told me that his dad had a gun, and I was terrified. I didn't know what that meant. We didn't have guns in my house, and my parents weren't gun people, and so I wasn't a gun person when I was a kid. And but he said his dad had a gun and fishing rods and stuff like that, and come over, we'll go fishing. And so I went over to his house, took me upstairs to his dad's closet. It was like stinky mothball smelling closet. I'll never forget that. Pulls out the gun box, opens it up, pulls out the gun. There's a gun. So we are maybe 8 years old, 9 years old.
Yeah.
He's pointing the gun at me, not like this, pointing the gun at me, but he's like holding it in such a way where the barrel is.
Yeah.
And I can see that there's bullets in the barrel.
Oh,
it was a revolver. I can see that it's loaded. So that scared me.
Yeah.
I thought it was novel, but it was scary. And I remember the lesson that it taught me was that, I was enamored by and excited by the opportunity to see a real gun. I'd never seen one. But when I saw it, it was more scary than it was exciting. And I'm glad that I felt that way, because at 8 or 9 years old, without an adult responsibly introducing me to guns, which is what needs to happen with guns, but I didn't have that at that moment, and there was no adult around, and it was a bit terrifying. So the fear that overcame me was, I think, a good thing. And I was like, yo, man, I'm out of here. I got to... and he was pointing the gun at me. That's how you read about that shit.
Yeah, absolutely.
All the time. That's how things happen. Look, I think it's exciting and great for young people to be introduced to the sport of shooting and what guns are all about. And it's a really cool thing. It's a hobby of mine. I love it. I shoot a couple times a month.
Yeah.
In my property and also in an indoor range.
That's cool.
And I hone my skills. It's like a muscle memory thing. You have to keep doing it in order to maintain your skill level. But in the absence of there being an adult to responsibly and properly introduce the young person into the sport, I think it's a tough thing.
Yeah, it's got to be safe.
Yeah,
totally. All right. Well, thanks so much, Peter. This is a great episode, and I'll see you next week.
Thanks, George.
If you like what you just heard, you can subscribe to The Daily Cash Flow on iTunes or wherever you listen to podcasts. And we'd love it if you left us a review. You can follow us on Twitter and Facebook at SiegelCap and on Instagram at Siegel.cap. As always, if you're an accredited investor, go to SiegelCapital.com and take our survey to see if you qualify to take part in one of our apartment building deals. That's SIEGEL Capital.com.